Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm your co-host Joel Elconin, along with Spencer Israel, and we have Reverend Father Emmanuel Lemelson on the line. He's the founder and president of the Lantern Foundation. Good morning, Father. How you doing on this Wednesday?
Good, Joel. It's great to join you. Thanks for the invitation.
No, love having you on. I just want to get a quick update. Last time you had you on, you were kind of going toe to toe with the Wall Street Journal, and really haven't heard anything much about it. Any updates on that not so nice article they wrote about you?
Yeah, well, I have a good friend. He gave me this wonderful quote. He said, if you speak well of me, do so often. But if you must speak ill of me, do so sparingly. But just speak of me. And it's almost a philosophical way of looking at what happened. I mean, I suppose if you're public and you're in the media often enough, sooner or later somebody's going to take a pot shot. But going toe-to-toe with the Wall Street Journal, perhaps not easy. That article gave rise to 35 different articles around the globe. There were reports written in China, in Australia, in England, Romania, Russia, full-page article in Le Monde in France. It ran almost continuously on Greek media, on the TV, and in the written media. It was really pretty extraordinary, the reach. I wish, however, the reporter had been more conscientious, and I'll never understand perhaps fully the reasons why he chose to do what he did, but God willing, I think the truth will always come out. I mean, there's a beautiful passage from the Gospels, in fact, in Luke 8:16-21, that speaks about you can't hide a lamp, you can't put it under a bed or under a vessel. You have to put it on a table or light the whole house, and that's how the truth is. I mean, the truth always emerges in time. So it is what it is, but glory be to God, one major publication already retracted fully. That was Christian Today. And I think in time, the error of the reporter will be increasingly revealed.
Dennis wants to know if you're still short Skechers.
No, we covered our Skechers position. We did continue to short it after we originally talked to you about it in June. We shorted it all the way up to 142 pre-split. That was our average short price. And we had said on the show, I think our exact quote was it would be subject to a precipitous fall. It fell, I think, 48% from our short price in the ensuing weeks after August. I think we stopped shorting around August. So that one really wound up being right on target, glory be to God. Perhaps underappreciated in the media. I'm not aware of anyone else that was publicly shorting Skechers.
Is this one of them where you're going to do the old WWE trick and you turn around and go long or not?
Joel, Skechers is a good company, and the management team is good, and operationally they're flawless. They're great at marketing, but it's still overpriced. It's not a value. I don't think the product. I'm not a big fan of the product, frankly. I think the management team's good at what they do, but they were sending a message when they were selling stock, and copious amounts of stock at those higher prices. The risk always when you have a popular issue like that, like Skechers, where it's really promoted, and it's out there, you have to ask, why are they marketing the stock so heavily? Why is it being promoted so much? And I think people are drawn to it, and they may be confusing it with the success of like an Under Armour or a Nike that really invests heavily in R&D and produces a durable competitive advantage over a long period of time. Skechers has a different model, and it's probably not nearly as durable, their advantages.
All right, we got to talk about the oil and gas sector here. Oil goes crashing down through $40. Got to 36.50, 36.64 yesterday.
Yeah.
Now, you got a big position here in GEOS, and you filed a form with the SEC, a 13G here, outlining a major commitment in shares of GEOS here. Father, this one is not working out for you.
Yeah, Joel, it's actually working out beautifully. I can't believe the price keeps coming down. I mean, at the rate we're going, I guess we're going to become a special purpose entity just selling geospace stock. And that's fine with us, actually, because at these prices, you've got an enterprise value of roughly $96 million. With a company that's about $300 million in assets. All those are tangible. And we're talking about fully depleted assets. So, you're really paying for inventory and cash at this level. At the current market cap, you're getting buildings, machinery, and so forth totally for free. I've always been a big fan of the management team there, Rick Wheeler and Tom McIntyre, the CFO. Extremely honest, very down to earth. The key thesis there is that geospace, historically, the price of the issue has always tracked that of the price of oil. And this has been an extraordinary retraction in the price of oil and gas, which itself is probably exaggerated in the media, frankly. But that aside from them, because that's a bigger discussion, the issue with this geospace discretely is that exploration production is going to continue at some point, certainly, in terms of the seismic tools they produce. But more importantly, this company has, over the last 10 years, moved in a direction of what's called permanent well monitoring systems. These are systems that are installed permanently to monitor seismically the activity in underground reserves. And what they can do with these systems is they can improve the output of existing resources tremendously, maybe by as much as, say, 50%. So the return on investment is enormous. So if you've got Baker Hughes, reporting the pullback on all of these new installations of wells and rigs, it'd be logical to assume that oil and gas majors are, if they're going to be cutting capex, which they all are, Exxon and Chevron and so forth, Statoil, you name it, they would want to extract greater resources from their existing reserves. So if they can improve the efficiency of those wells without drilling and exploring for new ones, they're going to get contracts. So the reason we continue to be buyers, and we're very aggressive buyers in the interest of full disclosure, is that we believe this company will be cash flow positive in 2016. That's fiscal year 2016, which for the company started October 1st. And secondarily, we believe very strongly that in the next 9 months that the company will be awarded a large PRM contract for a permanent well monitoring system. We're not 100% sure of that by any means, but that's our position right now. But even if they didn't get that contract, we feel confident it's going to be cash flow positive. So it is a company with no debt, tremendous liquidity, honest management team, and it produces a piece of equipment, tangible equipment, which is just really cardinal in its importance to stable energy markets. So, and then on the oil and gas side, in terms of the larger macroeconomic issues, you look back 7 years ago, we were talking about peak oil. It looked like it was going to be, anarchy would break out or something, that we'd reached peak oil in 2008 and it was going to decline from there. Now we have almost the opposite thesis, which is being expounded by the media, which is the world is awash in oil, we'll never run out, it's infinite in supply. Both those are exaggerations. It's a finite commodity, has very high utility, population growth contributes to consumption, population growth is about 74 million people a year. So, I think you have to be able to rationally detach from the media and sort of ask yourself, if you can buy a dollar bill for 30 cents, an honest management team and a company that produces a product that's very high utility, that's probably a safe investment. Probably a wise
Do you
investment.
trade around your position at all, or do you just buy?
Not typically, Joel. We're really not. The idea of the bonus fund LPs is not to trade per se. It's to make commitments. But occasionally we do sell or buy here or there if there's an opportunity, or maybe an ancillary reason we do that. For example, if there's an area that we think the capital can be a more attractive commitment, we might do that. But it's not the goal, and we do it very, very rarely.
What do you think this company's worth here with oil at $37.83?
Sure. Well, if you look at historically, the premium that the market has placed on the asset, so if you look at just about one measure, like price to book ratio, for example, the market has placed a premium of almost 3x on the company. So you would say, well, if you look back over a period of 20 years, for example, it should be trading about $60 a share. Now, their earnings are extremely volatile, and their revenues are very volatile. So that's scary because people confuse volatility or beta with risk. We don't see it that way at Lemelson Capital. We think risk is a function of how much knowledge you have about what you're buying and the margin of safety you have. But if this company were to get another large PRM contract, the last contract they got from Statoil was $170 million. It was about 2.5 years ago, that award. Let's say they get a similar contract. Statoil, in this case, implemented the PRM system on one of 5 oil fields they have. I think this company could go up 10x in the next 5 years, frankly. I think that would be realistic.
Is this one? Is this one investors should be putting their grandmother into now?
The thing is, Joel, people need to do their own research.
Okay.
And they need to be really cognizant about following Lemelson Capital into any trades because we're very patient. We said at the onset, I think a year ago when we first talked about geospatial, that we had a 2-year timeline in mind.
Nice.
So we're about a year into that. My experience has been that very often people expect quick results. You shouldn't really expect quick results on anything. And so if you were going to try to learn from anything that Lemelson Capital is doing or writing about, be cognizant of the fact that Lemelson Capital has in its DNA a very particular personality predisposition towards patience and discipline, and that may not be everyone's goal.
Reverend, we're on the phone with Reverend Father Emmanuel Lemelson. He's the founder and president of the Lantern Foundation. Reverend, recently you were on Fox Business News, Varney and Company, discussing the Fed's proposed rate hike. This is just a major and important topic in the news here. What is the Fed going to do next week?
Well, it looks like they're going to raise rates, but still rates are very, very low. Um, and with regard to that interview on Barney and Company, the point was really that, you know, from a purely economic standpoint, we would say, well, this could affect borrowing rates, obviously, and margin loan debt in the marketplaces, which has fueled this bull market for the last 6 years or so. But I think that the deeper, more important underlying issues, which I try to convey on the show, is that it's really probably the greatest factor contributing to income inequality in the world. And more importantly than income inequality, really wealth inequality. And what I mean by that is that we have very low interest rates, and it's very inexpensive to borrow money. And you devalue a currency, you inflate asset prices. And the conduit of wealth for the 1% or the 1/10 of 1% or the 1/100th of 1%, they don't get where they're at from a paycheck. I mean, they don't worry about a paycheck coming every other Friday. I mean, they get where they're at on the 400 whatever it is by owning a lot of assets, productive assets, usually stocks, bonds, and so forth, and other income-generating assets. So, but for the rest of the world, they depend on their income. And income inequality and wealth inequality in the world is really probably the most extremes in modern recorded economic history. So when you have, for example, the top 85 people in the world controlling the same wealth as the bottom 50% of the world's population, which is 3.5 billion people, we've got a problem. And we need to look at those issues. And the United States is the leader still in the world economically, certainly the thought leaders. When we're doing this and we're creating this tremendous income inequality, we need to really think about that, because it's really not healthy for society and civilization. It starts to look almost pharaonic. I mean, it looks like the age of the pharaohs, where you have just a handful of people controlling enormous resources in the world. And so when we talk about interest rates, let's go beyond just the economics of it. Let's get into the human issues, because it's devastating when 1 in 10 people don't have enough to eat, or 1 in 7 live off just very modest needs, $1.25 a day, something like that. It's really almost obscene when you see people that have, $50 billion or something like that. Just tremendous advantages we've created through low interest rates.
Moving on here, in the news, the ISIS attacks here. You had the Friday the 13th attack in Paris, the hotel. We don't know the relation to the events in San Bernardino. I mean, it's all over the financial media. Do you just try and just put your goggles on and just, put this in the back of your mind? Or, how do you approach this? And do you think it's going to have a long-term negative effect on the markets?
Well, I don't think it's going to have a long-term negative effect on the markets, Joel. But I think it does give rise to a incredibly important question. First, what preceded the attack in San Bernardino, of course, were the attacks in Paris, which it really, I think, shook the world, and 130 innocent people died. And 3 words come to mind: Lord have mercy. I mean, nobody deserves to go out and have a coffee and wind up dead. It's not cool. And I think the world focused on Europe and the immigration issues in Europe and is overreacting, perhaps. But the reality is, once this happened in San Bernardino, we have to look at the U.S. and say, what's the result of gun violence and shooting violence in the U.S.? And in the U.S., we've had, I think, 350-plus mass shootings in 2015 to date, far outstripping probably any Western country in the world. I mean, we're probably on par with like Somalia or something like that. And yet we're talking about the problem in Europe. We have our own problems to deal with. There's really a lot of issues going on here. It's multifaceted. It deals with politics, and it deals with economics to a certain extent, and you can't turn on CNBC or Bloomberg and not read about it. But I think we have to be very conscientious in the world not to turn on our brothers and sisters who are Muslims, not to overreact. At the same time, we have to be conscientious to protect our country and ourselves from this violent streak. ISIS is really an extraordinarily nefarious organization. I mean, it almost makes Al-Qaeda look like Girl Scouts in their violence, in their harshness, and their willingness to kill ruthlessly. Let's pray, Joel, it doesn't result in another war. And let's pray that the world will come closer together in light of this violence and this chaos and this absurdity to combat it. And because the world needs more peace. I mean, especially this time of year, we're contemplating, obviously, if you're Christian, Christmas is right around the corner. This has tremendous implications for how we see the world. And this is just a tremendous tragedy. But I don't think it's going to have an impact on financial markets.
So you're not subscribing to the Donald Trump theory of just banning Muslims then from the United States?
Well, I was with Donald back in September 30th in Keene, New Hampshire, where I had parish out serving. He's a good man, and I think he's actually in his core, he's humble. I think he means well. I'm not sure everything he's saying is being properly quoted in the media. And, oddly enough, right after this yellow journalism hatchet job that the reporter in the Wall Street Journal did on my own story, they did the same thing to Donald Trump the next week. I have a renewed sense of appreciation for people who get attacked in the media. But I do think he has to think maybe a little bit more carefully through these things. I don't think what he said is what's been reported, and I think people don't give him enough credit for his caring and compassion for other human beings, which is very real. So we'll see where it goes.
Well, I mean, who knows what he's trying to accomplish with some of these statements. I can't believe that he actually thinks some of these things that he says, and who knows, maybe he's just trying to set up the Republican Party so when he steps down out of the race, everyone will be so happy that he's not in it. They'll say, they'll grab another Republican. So yeah, that's
Yeah, it's extraordinary. I mean, clearly some of those things may not be the most well thought out, and again, many of them I believe are also misconstrued in the media. But who knows? I mean, it's really been extraordinary. We're talking about 6 consecutive months of leading the polls and by a very, very wide margin. So, it's really interesting to watch from a sociological perspective. Where's North going? Let's pray, Joel, that it's really not going down this road of persecuting a part of our society. I don't think it's going there. I really don't. I don't get that feeling from Donald at all. I think what he's really trying to say is, let's look at this, let's protect our country. But things like setting up a database or maybe barring all Muslims from entering the U.S., those are pretty extreme suggestions.
We've been on the line with Reverend Father Emmanuel Lemelson. He's the founder and president of the Lantern Foundation. Thanks a lot, Reverend. We'll talk to you again soon.
It was wonderful being with you, Joel. I love your show, and I always look forward to joining you. Take care.
Okay. All right.